Many online sellers believe that it's Amazon, Etsy, Walmart Marketplace, or another platform collected California sales tax. Their CDTFA audit should be simple. Unfortunately, that's not how these audits work. Most online seller audits begin with one problem: the numbers don't match. Marketplace reports, Shopify records, 1099-Ks, bank deposits, and California sales tax returns all tell slightly different stories. The mismatch between these documents themselves is not always the problem. The problem is your inability to explain it to the CDTFA. That's the problem. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA. And for more than 25 years now, my team and I have represented e-commerce businesses, Amazon sellers, Shopify merchants, wholesalers, and online retailers in California sales tax audits. Today, I'm going to explain why marketplace records often fail to match California sales tax returns. I'm going to talk about what the CDTFA expects to see and how online sellers can defend legitimate differences before an audit becomes something much more serious. Most CDTFA audits do not begin because someone accused you of tax fraud. They begin because multiple data sources don't reconcile with each other, and the CDTFA sees that. The auditor is going to come in and compare marketplace dashboards, Form 1099-K, Shopify reports, merchant processor records, bank deposits, accounting records, income tax returns, your CDTFA sales tax return. If these records don't reconcile, the auditor is going to want to know why. The issue is rarely one missing transaction. It's more whether your entire reporting system can be trusted. Multiple sales channels create complexity. Modern online businesses rarely sell through one platform. A lot of them will have Amazon Marketplace, Etsy, Walmart Marketplace, TikTok Shop, Instagram sales, wholesale customers, direct invoices, or your own Shopify website. Some of your sales may qualify under marketplace facilitator rules. Others remain entirely your responsibility. If every sale ends up combined into one bookkeeping category, it can become extremely difficult to prove which transactions belonged where. A mismatch does not automatically mean unreported taxable sales. Marketplace reports often include items that should not be compared directly to taxable California receipts. Examples include things like sales tax collected by the platform, shipping charges, refunds, chargebacks, canceled orders, marketplace fees, advertising charges, reserve accounts, nationwide sales instead of California-only sales, and transactions that occurred outside the normal reporting period. These differences can ordinarily be explained if proper records exist. So if you get nothing else out of this video, build your audit file before the auditor does. One of the best defenses to this type of audit is preparation. Before the auditor asks, your record should already separate marketplace sales, direct website sales, California sales, out-of-state sales, taxable transactions, exempt sale, returns, refunds, marketplace deductions, and direct retail sales. Each number in your reporting should be traceable from the marketplace report to the accounting records and ultimately onto the CDTFA sales tax return. That's how credibility is built. A typical sales tax audit file may include marketplace agreements, marketplace transaction reports, payout reports, refund reports, chargeback reports, shipping records, resale certificates, exemption documentation, and bank statements, merchant processor reports, accounting records, and the CDTFA sales tax returns themselves. The auditor is looking for continuity. Every reported number on the sales tax return should have supporting documentation. If the support disappears, the sales tax adjustment risk increases dramatically. So when do sales tax questions become income tax questions? Many online sellers don't realize that the CDTFA is not their only concern. If marketplace sales are missing from sales tax returns and also appear inconsistent with income tax returns, California is going to ask whether gross receipts were underreported for income tax purposes. That can involve the Franchise Tax Board into a sales tax audit. It can pull in the IRS or both. A sales tax audit can often become the domino in a much larger multi-agency tax controversy. Here's what not to do here. Don't get in there and try and fix the records. Once an audit begins, some sellers panic and they start to recreate spreadsheets. They start to delete marketplace reports, edit QuickBooks, backdate invoices, create missing resale certificates, or ask the employees to help clean things up. These type of actions rarely solve the problem. Instead, they often create new problems, new questions, and they're going to implicate your credibility and whether you had criminal intent in that audit. You don't want that. Listen, messy records can be reconstructed, but altered records are much harder to defend. If your marketplace reports, your Shopify records, your 1099Ks, your bank deposits, and your California sales tax returns don't reconcile, do not assume the auditor is going to figure it out for you. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help online sellers reconstruct sales records, separate marketplace from direct sales, support legitimate deductions, prepare transaction-level reconciliations, and defend CDTFA audits through both a civil and criminal tax defense lens. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Because the strongest audit defense isn't explaining why the numbers don't match. It's proving exactly why they do. Dave Klasing, tax attorney, CPA.